Hello, everyone. Welcome to video 2 of chapter 3. I wanted to make a quick correction just on that last exercise, but then I'll go into employee versus independent contractor. The mistake I made is reading the exercise regarding the bonus, I thought we were talking about October 2024, just a couple months after the bonus was declared. But really, it was asking what happens if the bonus isn't paid until after the end of next tax year. So every time once we've passed that 6 months, that 180 days, the expense is going to fall in whichever fiscal year it physically gets paid. So if it doesn't get paid until October 2025, then it will be expensed in the 2026 year. The fiscal year is always considered when is its year end. So October 1st, 2025 was the start of the next tax year. So fiscal 2026 will show that bonus expense being paid. But we are after the 180 days, so it won't be expensed in 2024 when declared. It's now being expensed a year later, 2 years later. Okay. Now that that's sorted out, let's get back into the um, this particular lecture. Why do we discuss employee versus self-employed? When you are a business owner, you have way more allowable business deductions. Employment expenses are usually very restricted because your employer is expected to pay most of the expenses to carry on the business. If I'm running my own business, I'm paying for everything, rent, inventory, insurance, but my employees are not expected to pay for rent of the business office. They might have a small number of expenses for like a home office, um, but it's not quite the same scope. So employees have a very limited number of deductions. Self-employed individuals have more deductions available. When you have your pay stub, your employer would take off CPP and the employer will match your CPP contribution. So they will add to it. So this is employee employer contributions. If you are self-employed, you pay both parts. If I'm a self-employed individual as like a contractor, I pay the CPP I would as an employer, but I'm also the business owner, so I will pay the employer portion too. So a self-employed individual, will pay double the CPP. So CPP contributions are a little bit preferable when you're only an employee because you're just paying half instead of the full amount. But employees might have employment benefits that they don't have to add to income and that's paid for by work. So your work might provide a dental and drug plan or a health plan. And that could be provided to you. You get the benefit and you won't have to include it in income. Whereas the self-employed individual is paying for their own benefits. That expense is coming out of company money. It's unadvisable, but creates an opportunity for tax evasion. We're not going to elaborate too much on that. That's just if I was a self-employed contractor and someone pays me in cash, I have an opportunity to hide that money. But I wouldn't advise that we do that. So I'm not going to set, but the self-employed individual can set their own work schedule. An employee has to be on site, ready for work. They use the tools of the employer, whereas a self-employed individual is able to set their schedule. They're able to arrange the work they do around, how does it fit? What works best for them? Employees are very limited in their deductions, but if you are a salesperson who earns commission, there are a few additional expenses allowed to you because it's recognized that a salesperson has to woo customers a little bit. So they might take them to dinner or entertainment. Maybe they have to travel to meet customers. And so there's some travel expenses and hotel. So it is understood that commission employees have more expenses than a regular employee who just goes to the office, works on the computer would have. So we mentioned CPP contributions. So CPP contributions for an employee is up to 71,300. That's for 2025. CPP, the Canadian Pension Plan offered a second ceiling for higher income earners. So it covers the difference between 71,300 and 81,002. So just about an extra $10,000. Um, so how is this treated? The first CPP ceiling is 5.95% of income over 3,500 up to that first ceiling amount. So the most someone will pay here is just over $4,000. For the next 10,000, 9,900. For the next $10,000, they'll pay 4% of the amount, which is an additional $400. Now, these two deductions are treated differently. That CPP goes on the tax return as a credit. This additional 396 will actually get subtracted from their income. But the point on this slide is not how is it treated on the tax return, but how is it treated as an expense for income. The employee pays their employee portion, these two amounts, 4,430, and the employer will have to match that contribution, 4,430. So the total CPP being paid is 8,860. So CPP is being paid in your name of almost $9,000, but you only had to pay half of it. A self-employed individual might have to pay 8,068 for that first ceiling because they're paying both parts, an additional 792. So a self-employed individual would have to pay that full amount on their own. EI is similar. It's 1.64% of earnings up to 65,700. That calculation means the maximum EI is 1,077. That's for the employee. The workplace, your employer, has to pay 1.4 times the amount. So they will pay 1,508. Self-employed individuals. So EI is employment insurance. Many business owners can exempt themselves from EI because if I'm the business owner, am I going to fire myself? Likely to say, no, I won't. So there's voluntary participation for restricted EI benefits. I can choose to participate in EI. Since I never plan to fire myself, I can say, well, I'm not going to need EI, so I'm not going to pay it. I'm not going to contribute to it. But maybe I have a child in the near future. Maybe I'm planning on having children and I want to take part in paternity leave or parental leave. Well, in order to get those EI benefits, I need to pay into it. So I might still voluntarily contribute to the EI, but if I do, I have to pay both portions. So EI premiums, CPP contributions, these are business expenses. So those get to be deducted from business income. The EI premiums are a personal tax credit. CPP contributions on the personal employee tax return are personal tax credits. That second ceiling is an other deduction that get to be subtracted from income. Self-employed individuals, the personal portion, because they're paying both parts, the employee, when they contributed to CPP, they get it as a tax credit. The employer got it as a business expense. It's the same way for the self-employed individual. So the employer portion will still be handled as a tax credit, and the employer portion will be an other deduction they can use to subtract against their self-employed income. Employer perspective. So I'm the employer. Why would I want to hire a self-employed individual? I want to hire a contractor instead of an employee. Well, if I hire a contractor, I don't have to pay the employer CPP for them. I don't have to deduct payroll taxes or EI payments. If someone sues me for negligence, I can pursue the self-employed individual. If I hired a contractor, let's say I took on a job to construct a restaurant and I hired a contractor to build a patio deck. And then once it was done, the patio deck collapsed. Okay, well now the restaurant will sue me as the owner of who built it, but then I can sue the contractor because it was his work that fell apart. So I have a legal claim. But if they're my employee, I can't sue the employee for making a mistake on the deck. I took on the liability as the business owner. I won't have to pay for additional benefits. I won't have to pay for health plans for an employee. They're self-employed, they can pay for it themselves. And there's other administrative costs. And it's less of a commitment to have a contractor. I had a restaurant, I hired this contractor just to build one deck, and then he's done. I don't have to keep him on the payroll. He did his part and he moved on, and I will call him again should I ever need to build another patio deck. There's personal service business. So the employer, we've established that employers do like to hire independent contractors. So what's to stop them from just going to their employees and saying, "Hey, all of you are independent contractors now," or if employees say independent contractors, they might be doing a personal service business, changing the nature of payment from employment to business income. After initiating certain steps, the former employee becomes employee of their own corporation. So I was an employee of the business. My workplace said, we'd really rather you were a contractor. So I was like, okay, I incorporate myself as a corporation, but I'm still going to the same place and doing the same job. Did the situation really change? So payments made by former employee to corporation are now business income. If personal service business applies, the corporate tax rate is equal to the highest tax bracket of individuals, 33%, instead of the 9% for small Canadian private corporations. Deductible corporate expenses become limited to what the employee would otherwise be able to deduct. So the government says, okay, you're calling yourself a contractor, but you are still fulfilling the same role as an employee. You're still doing the same things. So since you are functionally still an employee, you're only going to be able to deduct things as an employee, and we're going to tax you at a higher rate. We're going to tax you at the rate the highest rate you would be paying if you were reporting that income on a personal return instead of that corporate tax rate. So this removes the benefit for me, the employee, of being self-employed. So they're still treating me as an employee. So, how do they make the distinction? How do they determine if someone is employee or self-employed? Part of it is intent, actions, and behavior. So, what do they look at? The factors they consider is who controls the work. If I hire a contractor and I say, "Can you build a patio deck for this restaurant?" That contractor will have his own schedule. He'll say, "Okay, I have a few projects going. I can have my guys come Thursday to get started." I say, "All right." But if he was my employee, I might say, you need to be here Monday to start on to start on the patio. So I have much more control over an employee's schedule, and I have control over what they do in a workday. Whereas a contractor, yes, I'm hiring him to build a deck, but the when and the how of it is a lot more under his control. Ownership of tools and equipment. When I go to work as a teacher at Fanshawe, I use their classroom space, I use their desks, I use their projector. They've provided the space and the tools in order to carry out my lecture, my ability to lecture. So in that space, I am an employee. I didn't bring my own projector. I didn't bring my own tools. So since the workplace is providing those things, that is an indicator that I'm functioning as an employee. The ability to subcontract or hire assistants. When I hire the contractor to build the patio, he has his own staff. I said before, he's like, "Oh, I think I can get my guys out there for Thursday." So if someone shows up to the workplace that is not the person I talk to, that's probably not a big deal. I hired him to build the deck. There, he sent individuals to build the deck. As a lecturer of Fanshawe, do you think Fanshawe would react well if someone else showed up to teach the class who wasn't me? Probably not. They would say, we've hired you, we're paying you to lecture the class. You don't have the ability to contract out that workspace. You can't hire additional people. So that's a factor saying Fanshawe is my employer. Financial risk and opportunity for profit. When I build the contract, when I have the contractor, we'll usually agree on a price, a quote. This deck is going to cost $8,000. If he can get the work done quickly or done well and quickly enough, he has the opportunity to increase his profit margin. But if it goes over, if something happens and his guys don't get the work done, well, now he might lose money on the job. So he's taking on risk and opportunity of profit because he has control over the work. He's working in that space. If he's an employee, the opportunity for profits on the employer. So if I have an employee build the deck, I might want him to go faster. If he builds the deck under schedule and I get the restaurant built faster in time and I'm able to get my payment, that money sits with me, the employer. So since I have the opportunity for profit, he's an employee. If the contractor has the opportunity for profit, that is an indicator that they are self-employed. So these are the five major factors that they look at. So common facts supporting independent contractor, have they registered themselves for sales tax? Do I pay sales tax for their time? So I'm not paying CPP contributions, but I am selling additional items. Working for other clients. Do they have other restaurants and other jobs they're working of and I'm fitting into their schedule? If they work for only me, that insinuates I'm their employer. Do they advertise their services? Do they cover their own overhead? Are they periodically preparing invoices? It says for invoices an irregular basis because when you work for someplace, they might pay you every 2 weeks. So if I'm paying this person every 2 weeks, is that paying an invoice or are they just on the payroll? Advertising expenses and overhead has to do with, are they running their operations as if it's a business? Are they trying to attract, even though I might be their only client for now, are they trying to attract other clients? So these are aspects and factors they look at to help distinguish between employee and self-employed. So don't think there's particularly a exercise related to it. I've put in the spreadsheet this contribution calculation for both CPP and EI for an individual and the employee portion. So a self-employed person pays the full amount. So this is just an exercise so you can try and see the math going through and hopefully a slightly more understandable way than just seeing that chart on, seeing this chart on the slide. Okay, so thank you for your time. When we come back, we're going to have a much longer conversation around employee benefits and what might be we include in income over just our salary and our wages. Thank you for your time. See you in the next video.